Hi, folks. This is Mitch Firestone with Precision Trading Labs in New York City, and I am here to bring you the market wrap-up for the week of June 19th, 2023, that just ended on June 23rd. Here's a chart of what went on last week. In fact, for those of you who were aware, the last week we're trading. Last week was actually a shortened week. It was only four trading days last week. We had the Juneteenth holiday on Monday. So in fact, the week actually started, of course, on Tuesday. So we have 4 trading days this week. And we can see that this was actually kind of, the market took a breather this week. We were down. You can see the S&P and the Nasdaq were down about 1.5%. The Russell 2000 was down about a little less than 3%. And again, this was kind of a breather week for the market. The market actually had a nice grind up for the last several weeks, and in fact, about 3 weeks or so ago, technically it entered what would be considered to be a bull market phase. Doesn't mean that happy days are here again. It just means that essentially we had come off of, by more than 20%, a local low that had gotten created in October of 22. So in fact, we were up about, I don't know, 23 or 24%, I think, before this week. So this was this kind of, after several weeks of grinding up, this was kind of just the market kind of taking a breather, consolidating. All kinds of economic stuff going on in terms of inflation, and monetary policy and all that kind of stuff. So this was just kind of a breather. So that's where we were last week. And this past week. And in fact, here, if we just go back in time, we go back to the previous week, we can see right here, this was the week that preceded this one. We can see that there was actually a pretty healthy gain the prior week. We can see that the S&P was up a little less than 4%. The Nasdaq, the S&P was up about 2%. The Russell 2000 was up about 0.5%. So we can see that was kind of where we were last week, and then so this week again, kind of a breather. All right. Before I go on here, I just want to show the ubiquitous disclaimer, of course. Precision Trading Labs here. We are not broker dealers. We are not financial advisors. We are not fiduciaries of any sort. We are, a provider of subscription services, both in terms of trading services as well as education to our subscribers. Okay. So at any rate, that was the story on the broad market perspective for the prior week. And incidentally, what you're looking at here is a percent change chart. This was the 0 point from last week, the close of last Friday. And so this was the market activity this week. And right here, of course, is showing that this is the percent change for the last 4 trading days. So that's what we're looking at here. If we look at the analogous chart now for the various sectors, again, going back to the using last Friday as the 0 point of our close, the zero point for where the price action started this week. We can see that for the last, again, for that last trading week, healthcare and consumer discretionary products, in a sense, everything was down this week. But in terms of on a relative strength basis, these were kind of close to break even. And the real weak sectors last week were the utilities, energy, and real estate. So, okay, and then kind of clustered in between, let's say between -2 and plus, -2 and let's say, more or less -1, or if it's -3 and -1. These are this whole cluster of these other sectors. But again, on a relative strength basis, health, consumer discretionary, they were kind of at the top there, which would really just more or less break even. And then like I said, on the downside, though, utilities, energy, and real estate, those are the ones that were, kind of really the weak sectors here. One of the things that we look to do, of course, is to essentially trade with the trend where at all possible. And what we oftentimes do is we look for lower time frame corrections in the context of a bigger picture trend. So in the case of a bullish trend, or where something is showing relative strength, we're going to be looking for short-term pullbacks, short-term dips into various buy zones that I will show you in a couple of minutes. And that's what we kind of do with the symbols that are showing relative strength. Similarly, for the ones that are showing relative weakness, we are looking for lower time frame rallies in order to then put on bearish trades. So we look for a short-term rally back into a bearish trade setup. And then we're, of course, looking for then price to then kind of get smacked down from that. And of course, those trades can be expressed in any number of ways. One can obviously short a stock, let's say in these areas here for these sectors. And of course, another way to express the bearish trade would be to either buy a put or to do a bear put vertical spread. Or of course, one can also sell credit by doing a bear call vertical spread. So those are all various ways of expressing a bearish trade with these. And of course, we would do the inverse for the stronger sectors. And again, I wouldn't characterize these sectors as strong. They just were kind of less weak than everything else. So if we now pan out to the rolling month, and so now we're going to look at the last 5 trading weeks versus the last one. If we kind of pan out and broaden our time frame here, okay, this is where we are. This is what it looks like now. So again, what we do is we go back to the Friday before the last for the last 5 trading weeks, okay, and that represents our 0 point here. So we can see on here, this represents the week that started May 22nd. And then and then the end point is the week that just concluded, okay, starting on the 19th and then ending on the 23rd. And so what we do, of course, is we put this back to the prior Friday, and that's our 0 point here. Okay, so in terms of relative strength and relative weakness on the various sectors, we can see that the consumer discretionary and tech were the big kind of the big winners for the last 5 weeks or so, and with consumer discretionary on the upside, and as well as tech, that's up over about 7%. Okay, on the downside, materials, marginally weak at 1.5%, and really, kind of everything kind of clustered down here. So, in a sense, there were some relatively very weak sectors. Some of those have kind of pulled back. Or I should say have recovered. And so now you really don't have any major weak sectors, okay? And you've got, kind of these sitting up on top, and then you have this sort of cluster in the middle here. So, these all kind of represent, these are up at least 3.5%, 4%. So we're generally looking in these areas for kind of our bullish trades. And we're looking particularly on the bottom side here for bearish trades. And again, what we're doing is we're looking for short-term, lower time frame recoveries or rallies into trading zones where we could then express a short trade. And I'll kind of show you what these trading zones look like when I start to show you when we go to the live charts, which will be right now. So here is what where we were on the SPY, and so. Here is, let me just fix a couple of lines here that seem to have moved on me here. There we go. So here are what will be characterized as trading zones here, okay? And if we kind of look over here on the daily chart of the SPY, notice price has rallied up here. Notice it's consolidated here. And then notice that it's rocketed out of here, okay? This is an area of consolidation here. And what this area of consolidation essentially represents is an area where the supply of shares and where willing buyers were sort of in balance. Okay, price was more or less going sideways in here, and then all of a sudden, price rocketed out of here. What was going on essentially here was that the demand for shares within this range of about about 3.5 points or so here. And the supply of shares here were relatively in balance. And then once the price rocketed out of here and these trades occurred, essentially what you had here was an exhaustion of sellers where people were no longer, or institutions were no longer willing to sell in this region, okay? So they were willing to sell for this approximately, let's say, 4 to 5 trading days, okay? But then last week, or that prior week, then there were no sellers left. And so essentially buyers had to run up the price chart until they found willing sellers. That's how all of these trades occurred. So essentially the buyers ran up the price chart until they encountered willing sellers. Our expectation and from this concept of what we refer to as supply and demand is when price returns to this region, because price consolidated in a very narrow, in a kind of a narrow range, spent a relatively limited amount of time here, and then left with a good deal of energy. Not so much the first candle here, but then notice the next candle was very energetic. It was a very bullish candle. In fact, if I just blow this up a bit, okay, this was, kind of it started to kind of creep out of here, but that's a very bullish candle. It closes right at the top of its range. Okay, then notice right here where you have a significant gap. This is an outside gap here, and then price, rose up here again. Okay, it kind of paused here, and this is kind of this indecisive candle. And then notice again, price kind of really, there's a relatively bullish candle, not an extremely bullish candle, because it only closes about 25%, 20% in its top 20%, as opposed to pretty close to its top. But this is still a very bullish candle. Okay, so this move out of here suggests a whole lot of energy, and essentially where supply and demand went out of balance. When price returns to this region, we're expecting that we're going to see another bounce. And I'll show you an example of that in a chart that I'll kind of show you in a couple of minutes here. Okay, but that's the theory here, that price comes up, and basically what we're doing is we're expecting to then see a price bounce from this region. Okay, and we refer to this as a demand zone here. And the reason we call this a demand zone is because supply and demand are in balance here. And then once there's the exhaustion of sellers here, price then moves up. Okay, and once price starts to rise out of here, there's no longer any supply here. There's only demand that's left. And that's why we refer to this as a demand zone. Okay. The demand zone is defined as an area of expected upward price pressure that's created by the period of consolidation in a tight range. Then there's that exhaustion of sellers of what I described. And then an energetic bullish move as sellers move up the price chart. Okay, or I should say the buyers move up the price chart in order to find willing sellers. Got to fix that. There's a typo there. So the buyers move up the price chart to find willing sellers at higher prices. And so that's what we're looking for on the buy side. So if we expand this down here, okay, what we're looking at here are the distances of various zones here. Okay, so right here where we closed last week, okay, we can see really 1% down. Okay, there's this move. So we're going to really be watching this level. Okay, we're expecting a bounce out of this level here if we get a pullback. Okay, so that's only about 1% down. So that's obviously a short distance down. Okay, and then if for some reason that level didn't hold, well, then the next sort of region down that we would be looking at would be that one right here. Okay, and that's right here. This is a drop, a base, and a rally there. There's kind of this pivot here, and this actually resolves. We can also look at this in the 2-hour chart and see a little greater detail on this. But this is a point of a clear reversal. Price spends very little time here, and then notice how the bullish move out of here in a gap and another very bearish, a bullish candle, excuse me. Okay, and so that's another area where we would be looking to buy. Okay, so we have this region about 1% down, and then this region about 3% down. Okay, so those are two areas that we look. Okay, and then further down, this is an area in a 2-hour chart. In fact, this is a good example here. I can show you of what I was referring to before about a demand zone here. So if we go to the 2-hour chart here, and let's just go back down to here. Here's what we were looking at right here. Okay, and this is an area that we had actually marked out for our subscribers. Price came up. Notice now price pulled back and then turned and went from there. This was a clear area of demand that we had shown our subscribers. And then notice a few days later, and this is actually the better part of about 3 weeks later, kind of price went up, kind of bounced around for a bit, and then eventually it came back. Notice it comes right back into that region where the reversal occurred, and then we got a nice move out of there. Okay, and then a few days later, it came back, consolidated right at the top of that level, and then we got another bounce. So this is one of those demand zones that I referred to before. And then these were two areas where there were nice bounces that actually came out of this. Now, in all candor, we only got this first trade. We did not get this second trade. And the reason we didn't get it was a combination of kind of what we saw. There was a very bearish move that sort of came down, and there was a gap. We were a little fearful of that. Plus the fact price had already been back here once. Typically, there's the expression, the first test of a zone is best. And so this was the first test of the zone. Price came back here, and particularly once it started to consolidate, we ended up not taking a trade here. As it turned out, of course, we were wrong. It did come up, but nonetheless, we held to our rules. And this though was a spectacular move, and that was by design based on that price action there. Okay, so anyway, that's the story with the SPY, and that's where we are in terms of looking for buy zones. In terms of if we were going to be looking to short, there's really nothing we're enthusiastic about shorting here. Okay, until you might get up to, let's say, and we have these dotted, that dash line above. And if we go back, and this goes back a long way in time, okay, notice price came up here. This is another area. This was an area of supply. Notice price then came back in here, and then we got that smack down here. This is in fact an area that we would not look to short from. Why? Because the price has already been back there once, and it drove into this zone. Consequently, for us, even though this was a prior area of supply, we're not enthusiastic about it. So in fact, the next clean area of supply is not for a long way up. That's 10% up. Okay, if we go all the way back here, okay, and in fact, if we look at this in the daily chart, this is kind of the next area where we've been looking to short, but that's a long way up. That's 10% up. So. But if we take a look at it and look at its structure, we can see right there, price rallies, consolidates. Notice that very bearish candle on that drops down there. In fact, this might even resolve into a weekly chart, depending on where these days actually fell in terms of the calendar. This could actually be a weekly chart. Okay, but anyway, that's the story with the SPY. If we go to the Qs. If we go to the Qs here, here's where we are in terms of the close. And back that up a little. So here is our close as of the end of last week. Okay, this is an area right here in the 2-hour chart that we might actually be looking for a bounce. And this is kind of almost similar, a little further down than the SPY level. Okay, but this is one where we could conceivably see a bounce. And if I bring this back to the 2-hour chart, we can see right here, price rallies, consolidates, and then notice the string of bullish candles that come out of here. Okay, this is a clear area of demand here in the 2-hour chart. So we might actually be looking for a bounce out of there. So that's what we're kind of looking at on the Qs. And then further down, right here, here was another area of demand here. However, notice right here, okay, there was this area has now been tested. There was a drop, a base, and a rally. Price came back, certainly, drove into this a little and rallied up here. It doesn't mean that we can't see another bounce out of here. It's just that this is a little lower probability. And so as a result, when price comes back here, we'll look to see what the candle formations are when price gets there. And we'll also, of course, look at the general market conditions. And we'll see what happens when it gets here. But this is not a fresh level of demand. This is a fresh level of demand because price has not been back here since. Okay, so that's what we're looking at on the buy side. On the sell side, on the Qs, if we go back here and we look at that dash line here, okay, this is an area right here where we go back to here. This is the 2-hour chart. And if we go back here, this actually goes a long way back. This is actually January of 2022. Okay, so this is about a year and a half back. We have not been back here for about a year and a half now. Okay, but right here, there's a drop, a base, and a drop here. Structurally, I'm not in love with this, but we'll keep an eye on this. This is an area where price could actually move down from. And so that's about 3.5% above where we are now. Okay. And then after that, I think the really kind of the clean area of supply that we would actually have some enthusiasm for is probably that. Okay, I think this might actually be similar. In fact, yeah, this is actually more or less the level that we were looking at in the SPY chart earlier. Okay, again, you can see this is in January of 2022. Price rallies, consolidates, and then drops. Again, a couple of very bearish candles here. And this is a clear area where there was a turn in price, a consolidation. And this represents an exhaustion of buyers. And we talked about an exhaustion of sellers on when price was beneath, when these levels were beneath current price. When these levels are above current price, these represent exhaustions of buyers. And this is a supply zone. All right. So that's the cues. So now let's take a look at a few other major symbols. We'll take a look at a number of the FANG stocks, which of course are now should really be referred to as the MANG stocks, because of course Facebook is now Meta. So if we go take a look at some of the MANG stocks here, here is Apple. Okay, so in the 2-hour chart here, notice right here we have a rally. Notice price, there's a very little tiny consolidation there. And then notice price kind of pops there. And then there's a pause, and then it kind of goes from there. This is an area, it's not the greatest demand zone here, because of the fact that the move out of here was really not all that energetic. So it really pops, initially there's a gap, and then after that, it's just kind of a grind up. So this is really, it's an area of demand, but it's not a great area of demand. And, generally we're looking for A and A plus setups. This is definitely not an A plus setup here. This is probably more like a B. But we'll keep an eye on it, because, we'll see if price actually kind of comes back to the zone, and particularly in a lower time frame, if we're looking at a 1-hour chart and it starts to kind of rise from here, well, then that'll show that there is actually some validity to this level, at which point then we may actually express a bullish trade out of it. But at least initially, we're not all that enthused about that. Okay, so right here though, and this is a much greater distance down. This is about 6% down from where we closed here. This is the next area really of clean demand. So price kind of comes up here, but again, it kind of just more or less kind of consolidates here, and it really doesn't rocket out of this. So again, this is really no better than a B, if we were going to give it a school grade. Okay, so neither of these I'm wildly enthusiastic about Apple. And generally, what we try to do when we're looking for setups is we essentially want to be picky, and that's one of the reasons, of course, why it's great to chart a fair number of stocks. And you don't have to chart thousands of them or even dozens of them, but if you have a couple of dozen things in your watch list, and you're really being picky, out of 2 dozen stocks, you may find 2 or 3 that actually meet all of your criteria, and you're willing to kind of give a grade or an A or an A plus. And that's kind of how we look at our trades and what we look to find. So again, on Apple, nothing that we're really enthused about. Okay, taking a look at Amazon. So here's where we closed on Amazon. Again, nothing that we're really wildly enthusiastic about here. You can see though, price, in fact, this was an area of demand. Price did actually come back here, and it kind of came off this front line sort of several times. And then right here, it really kind of popped here. So we didn't take this trade. One might say we were wrong for not taking this trade, but we have our criteria, we have our rules, and this just didn't meet our criteria. And so this wasn't a trade for us. On the other hand, down here, if we see, I have a note here to look at this in the daily chart. And if we look at this in the daily, okay, right here, this isn't actually an area where we're kind of more interested here, though. And and of course that's a fair distance down, though. That's over 9% down from where we are here. But right here, there was a drop, a base, a very bullish move. Okay, price, kind of consolidated here. But then notice now another bullish candle, and then a gap, and another. Okay, so this was kind of a better setup. Okay, not necessarily an A or an A plus, but certainly a B plus, probably, if I was thinking about it. So that's an area we'll certainly keep our eye on. And then above, pretty much almost the same distance away, If we look above here, okay, right here, here's an area, a rally, a base, and a drop there. Notice we have two very bearish candles with a gap in between. So this is something we're more enthused about here. But that's at the 142 area or so. So obviously we're a fair distance above. So we have levels here that we're going to keep our eye on. But again, not necessarily any great great setups here. Right here, this was an area. Okay, in the 2-hour chart on Google, price actually came down into this region and actually popped out of here. Okay, and if we look at this in the 2-hour chart here, and we now go back to that level that I just showed you, notice price came up, consolidated here. There's a little reversal there. Notice then a very bullish move, a pause, another very bearish, bullish candle. And then when price came back, notice it kind of dug in here, but then it popped out of here. That's a good example of an area of a fresh area of demand. Okay. Right here, though, if price pulls back here, we're done with this. We're done with this level. This has already been tested once. It's driven into the level here. So this is not really something that we've enthused about trading. On the other hand, this one down here, we would be. Okay. So that's what we'd be looking at here. And that's about 4% down. In fact, if we turn this into go back to the daily chart here, we can actually, see that right here. There's a rally, a base, and a rally there. Okay. So that's about 4% down. Okay. On the top side there's really nothing that we would think about shorting until about in there. Okay. There's a drop, a base, and a drop there. In fact, let me just fix the candles here. They seem to have gone out of whack here for some reason. Fix that. There we go. So again, this area is about 11% up. So that's a long way up. But right in here, there's a drop. Notice that little consolidation area right in there with that very indecisive candle there. And then notice the very bearish move out of there. So that would be an area. But again, nothing close on the sell side. So right here, this is where we would probably be looking on the buy side, about 4% down from where we are at roughly that 117.5 area. So that's the area of on Google. If we look at Facebook here, Facebook is actually kind of interesting because, okay, this is an area, first of all, of demand right here. This rally, this base, and then there's a rally there. Okay, but where it's interesting is this, and we actually go back. If we go back in time here, and we go right back to here. Notice right here, and this is February of 2022. Notice right here, this was an earnings announcement that occurred. Let me just turn that on here. So if you look right here, if you see that cross, that's an earnings announcement here. And what happened was on that day here, obviously it was a disappointing earnings or disappointing earnings guidance, whatever. And notice there was a massive gap that went down from roughly about the 320 area all the way down to like roughly the 250 or the 245 area. Okay, that was a massive gap. Okay, and then ever since then, okay, obviously nothing really approached filling this gap until we got to here in the beginning of this month. Okay, we actually then started to fill this gap. Okay, and then we've now kind of come back into this region, and now we're sitting here now. Okay, well, this blue circle essentially represents the remaining unfilled gap. Okay, so if you notice right here, this was the area right here. I've segmented this, and let me just actually make these a little thicker here so you can see it better. We'll just leave it alone here. So this was the area where the gap started, and this is the area down here where it says 0% where it ended. So we can see we've now filled about 50% of a little more than 50% of that initial gap that got created down here, because the gap is represented by this dashed pink line here and that dashed pink line. Okay, so you can see we've now filled about 50% of that, or 55% or so. Okay, which means that we still have a good chunk of this gap. Okay, so if price starts to move here and the market holds together, this is an entire gap area that really needs to be filled. And as we know, more often than not, over time, gaps tend to get filled. Consequently, if one plays a breakout here, or if one, let's say, we get a pullback back into this region and price starts to run here, there's essentially nothing, there's nothing structural to actually stop price from moving up here in terms of price action, because this is just air above here. And then again, the air ends right here. So this is just air. This is just essentially a vacuum that price can trade through here. So this is actually, we're going to certainly keep our eye on and look for, I won't say any excuse, but as long as the broad market holds together, we're really going to be looking to get into Facebook, into Meta at some point here, because we have this large unfilled gap area. Okay. On Netflix, we have something similar. Okay. So first of all, we have right now price actually pulled into this 2-hour demand zone here. Okay. So if we look at here, when we turn this into a 2-hour chart, okay, right here, notice there's a rally, price consolidates, pops there. Okay, this is an area of demand here. This represents, as we said before, an exhaustion of sellers. Okay, the buyers and sellers were in demand here. Then there was an exhaustion of sellers. Sellers you can think of as the supply of shares that willing sellers are willing to kind of part with down here. But then once price rocketed, once something happened, and essentially then people were no longer willing to sell here. They were only willing to sell at prices that were higher. Okay, notice prices now come down, dug into this level. Okay, we now are actually looking at a bullish candle as we closed on Friday. So it's quite possible that when price comes out of here, if price kind of comes out of here, then there is the potential that there could be one could express a bullish trade out of here. Now we're really not enthusiastic about that though, and the reason being though is that right above here there is an area of supply. Okay, and so this area of supply represents essentially where there was an exhaustion of buyers. Okay, and where we're expecting downward price pressure. So consequently, one could get into a bullish trade down here. The problem is that almost as soon as price starts to rise, it may just encounter, it's going to encounter essentially kind of a resistance above here, or, essentially this is going to represent, an impediment to this trade here. Okay. And if we look at it from a perspective of a reward to risk proposition, what I'm going to do is I'm just going to throw a line here that represents our entry. And if we were going to use, let's say, this as this zone perhaps as where for our stop at, okay, where at the very least you probably essentially want to give it at least to this local low. Really, this is the full area of demand here. Okay, so if we were going to use the full area of demand, okay, and we were going to put our stop, let's say somewhere here, we can see that we're barely getting 1.5 to 1. Okay, if we would get into a trade right here, because that's a 1-to-1 trade represented by that line. See that line there? That's 2 to 1. And we're midway. Okay, and this zone is roughly midway in between here, the front door of the zone. That's really only a 1.5 to 1 trade. Okay, that's really not. We're looking for more like 3 to 1 on in terms of how a trade maps out. So this is really would be a mediocre setup. If you use this as your stop out point here, which is this local low here that got created when price spun, when price turned there. Well, if we did that, then this starts to look more like a 2.5 to 1 trade. It becomes a little more acceptable. Again, this is not an A+ setup by any stretch of the imagination, but I just kind of wanted to show you kind of how we look at risk and reward here. And so anyway, that's what things kind of look like in that chart here. But the one thing that is interesting though, is if price actually takes out this area of supply, we have a similar thing that we saw in the Meta chart a minute ago. Right here, okay, again, there was a massive gap, and this was at the same time as that gap, that Netflix gap was at the same exact time, excuse me, as Meta, okay? And we had the same exact thing happened in Netflix, okay? And so, again, price immediately came up and filled a good chunk of that gap. But then ever since then, price has not been back there again until we get now here to June. Okay, so this is the area, the remaining gap fill region. Okay, so really running from about 460 to about, I don't know, what's that, about 508 or something like that there. Up to here, there's a massive gap that's waiting to be filled here. Okay, and so again, in fact, you can see right there, so 506, that was the origin of the gap. And so roughly from 459 to 506, this is all gap here. This is all air. So if price comes back into here, there's really nothing on a physical sort of, with respect to physical price action that can stop price from moving. Needless to say, of course, it's not to say that price is going to go through like a knife through butter here, but in terms of actual price action, there isn't anything there. So we're always looking to see if we can take advantage of when price goes into a major gap fill region. Okay, and then lastly, we'll take a look at Tesla. Okay, so right now, this is actually sitting in the midst of a 2-hour supply zone here. If we drop the time frame down on the chart here, we can see right here. Let's go back in time. So right here, here was an area of supply that we had mapped out. It dropped a base and it dropped there. Notice there was a big gap there. And so that was an area of supply. And so now price is kind of driven in here. And so price came out of this once, it kind of dropped down, and then it actually dropped right into these areas. This was an area of demand here. We can see prices now bounced out of here twice. So this is kind of sitting kind of in between now levels here. This level is shot. So one could potentially play a breakout if it goes through this prior area of supply, because this area of supply is shot. So that's one way to play this. But price would obviously have to kind of drive through here. And then one could potentially be looking at a breakout around the 275 mark. On the other hand, if price drops here, you could potentially see another bounce out of this area that starts at around 248. And that's about 3% down from where we are now, because price had barely kissed this twice. Again, we always want to be really kind of looking at a fresh zone here. This is not a fresh zone anymore because it has been touched twice. But having said that, it's kind of really been grazed twice. So we're going to still keep our eye on that. And then after that, below here, then really the two then next quality areas of demand are right here and then right here. Okay, and that's a fair distance down. That's about 11% down, and this other area here. That's about, what is that, about 8, that's about 8 or 9% down and right there. Okay, so those are where those two areas. So this is kind of an iffy, a cautious area of interest where we would be looking for a bounce. But then right here and right here, these are two quality areas where we would be looking for a bounce. This is a 2-hour chart. This is a daily. This is a 2-hour demand zone. This is a daily demand zone. So at any rate, that's what I got. So anyway, I hope you found this presentation interesting. Hope you find it helpful and educational. If you did, I'd like to ask if you would go to our in our YouTube channel, give us a like, subscribe to our channel. Also, you'll see in the description area, you'll see a link where you can actually schedule a call, and I'd be delighted to tell you about more about supply and demand, tell you about Precision Trading Labs, and talk about our educational services, and also again talk to you more about the supply and demand concept. Also, we are actually in the process of starting up a program. Some of you may be familiar with these companies that actually will help people earn a funded trader account, and we're actually starting up a program that's associated with that. So again, click on the link, give us a call, and I'll be happy to tell you more about it. So anyway, that's what I have for today. This is Mitch Firestone. Thank you very much for the privilege of your time, and I will see you next time. Take care.